I had been doing syndications as a limited partner, just as an investor as I was developing. And I started seeing how I was doing better on my multifamily in the U.S. than on my developing in Nicaragua and Costa Rica. So that's what drew even more of interest to me towards the industry.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Bernard Pierson. Bernard has more than 10 years of experience in real estate in both the United States and Latin America. He brings to the table valuable and diverse experience in multiple areas of the business, including acquisition, management, and ground-up development. He has recently focused on multifamily investing and is involved in general partnerships totaling over 350 units. He's also participated and has investment interest in 1,500 plus units across 20 properties. He is currently managing partner and founder of Equiti Partners, LLC, a multifamily investment company headquartered in Miami, Florida. Bernard and I have it's an interesting conversation. I don't think I've been anybody on the show who's done developments in Latin America. And so, he has some ties there. And so he's more capable of doing that than most of us would be. But it's very interesting to think about trying to do a development deal in Latin America, but then also why he's not doing that now and why he's doing it in the States now or working in the States. So he transitioned from, real estate in Latin America to real estate in the US. And he's going to go through some reasons and even research that he did. I mean, he did a lot of research, and he shares quite a bit of that during the show today. I know you're going to learn a lot, and it's going to be a very interesting conversation for you, talking about Latin America to the United States.
Again, here at GoBundance, I'm thankful to be able to be here and interviewing in person, which is rare. It's so much more energizing, though, I think, being in person and seeing face-to-face. And I have another great guest for you today. It's incredible to be able to meet somebody like Bernard in person. Bernard, welcome to the show.
Thank you, Whitney. Thanks for having me here. I'm very excited to be here.
Yeah, honored to have you. Just reading about your bio and a little more about you, just impressive background. I know the listeners are going to learn a lot from you today. There's not many... Actually, maybe any guest, even after 1,300 interviews now, nearly, that I know of that have done some of the things you have done. And so I'm looking forward to it. Give the listeners, though, a little more about your background, because I know we're going to jump into it because they're going to learn a lot from it, and just who Bernard is and just some of your real estate journey to where you're at now.
I live in Miami in South Florida right now, which is where I was born. I grew up in Nicaragua. I moved to Nicaragua when I was about 6 years old. I grew up there when I was 18. I moved to the U.S., went to school here and all that, and when I was maybe 25 or so, which was about 12 years ago, I'm 37 now, I started doing business in Nicaragua again. I was doing a lot of food trading. I would trade coffee, I would trade sugar, I would trade seafood, beef, and I started finding out it was very transactional. It was good money, but it was transactional. So that's how I got into real estate. Like, how do I find something that gives me sustainable income? And I found real estate, and that's how I ended up doing real estate. So
you built a business, but you wanted something that wasn't so transactional, something that would provide more passive income or things like that. What was that like? Exactly.
Yeah, but the business was very transactional, what I was doing. Yeah. It was deal by deal and whatnot. And that's how I started listening about real estate, reading about real estate, listening to the different podcasts out there and educating myself, reading books. And I got into real estate. My first real estate adventure was real estate development, which was about 10 years ago when I started, and this was in Latin America. We started building single-family home communities and condos in Nicaragua and Costa Rica, and we did that for many years, for about 6-7 years. And about 5 years ago, I started transitioning more towards the multifamily acquisitions, syndication side of things. I had been doing syndications as a limited partner, just as an investor, as I was developing. And I started seeing how I was doing better on my multifamily in the U.S. than on my developing in Nicaragua and Costa Rica. So that's what drew even more of interest to me towards the industry.
How did you feel confident tackling development? But then very few people are doing development, I think, on their first project, right? Mm-hmm. But much less in another country. I mean, of course, you have more experience there than most of us would probably. But tell us about that. How did you have the confidence to move forward with development on your first project?
So what happened with me was, before I got into development, I already had that real estate bug, the interest to get into real estate and whatnot. And I met these guys that from Colombia, and their headquarters are in Costa Rica, and they develop real estate. To this day, they still were great guys. We're still good friends. We're still even partners to a certain degree. And they wanted to grow to Nicaragua, and I grew up there. It's a small country, right? Like everyone knows each other, so it was the local. I didn't live there at the time, but I was a local guy. So we started talking. At the time, I would travel to Costa Rica for my other business all the time. So I met them there. We would have lunch, and that turned into a partnership where we became partners and started our development projects.
Nice. Okay. So partnerships, right? Relationships, so crucial. Listeners hear me talk about this so often. It doesn't matter if you're finding deals or whether you're wanting to do development or it's partnerships, relationships, right? And finding those people are so crucial. Tell us, let's move to, though, you started doing those deals, and maybe what were some challenges, too, of doing those projects in Latin America that maybe we wouldn't think about, here in the U.S.?
Well, many. Specifically for me, there was one big challenge, which was I was still living in the U.S. at the time. So I would travel every week, Monday through Friday, to Nicaragua on most occasions, because that's where I was doing most of the work. I would travel to Costa Rica occasionally as well, but this was every week. My wife had flexibility at her work, so at her job, so she would sometimes come with me, and sometimes we would stay the weekend or something, but there was a lot of traveling involved. Doing business in Latin America in general is very different than doing business in the U.S. There's the hurdles you have to go through. I'm not saying it's easy here to develop real estate here, but over there's everything you have to go through with the government, everything you have to go through with kind of like what the issues we're having now with the supply chain. Well, that's constant over there. We think everything is more affordable. It's not. Materials are more expensive. Maybe labor is more affordable. It's not as efficient. That's just a few of the challenges, but I can name hundreds. I mean, I can be here all day naming challenges.
So let's move to why did you start in Latin America? So you were living in the U.S. Why did you start there?
Two reasons. One, I'm from there. I felt comfortable. It was kind of my go-to in my town, so I kind of knew my country very well. I know my country very well. And I always wanted to start real estate with someone who had done it before, with someone who had experience. And I had that opportunity to do it there, right? So that was the reason, the partnership.
Nice. But then you soon started doing real estate in the U.S. Tell us a little bit about that transition, and let's talk about maybe the reasons why. I'm sure you did a lot of research. Mm-hmm. Let's go into that.
So what started happening was, at the same time, I was doing a lot of LP investing. I was a passive investor in multifamily syndications, not just multifamily, but different asset classes in real estate. And I started seeing how well they were doing, and to a certain degree, they were doing better than what my projects were doing in Latin America. The market down there is very illiquid. It takes time. It takes ages to sell. Not ages, obviously, but it takes a long time to sell. So one important thing is that multifamily or commercial real estate concept doesn't really exist down there. We don't value property based on cap rate. That does not exist. So it's not like you can go build a multifamily building and then sell it based on the NOI. It's not going to...
What do they value or base the value on?
You're not going to see comparables, typically. You're not going to see many multifamily buildings. Most are going to be condos and just single family homes and stuff like that. And office space, they're going to be condos, like fractured office, where they do a condo for the office building. Even for retail centers, same thing. It's very rare that you may see a little bit more malls and retail centers that do have a little bit of that, but you're not going to see multifamily being valued by cap rate. None of it, that just doesn't exist. The concept does not exist. You're starting to see some of that in countries such as Mexico and Chile. Not as much, but you see a little bit more of that. They're a little bit more, I guess, sophisticated in that sense. They're starting to get to that level where they see it as an asset class and as a business.
Okay. So you started doing research. You started learning to be a passive investor, right? Mm-hmm. You started seeing what was happening. You were making more money as an LP than you were making doing the real estate in Latin America. What happened then? Right.
So when I was doing my research, I started reading up. I don't know if your listeners know this or if you know this, but the GDP of Latin America is about 5 trillion. The GDP of the U.S. is about 20 trillion, about 4 times as much. The population of the U.S. is about 330 million. The population of Latin America is about twice that. So just think about that for a little bit.
Wow. I would not have known that. The population is twice.
Right, of Latin America, including the Caribbean. To put things into perspective, the GDP of Nicaragua is, I want to say, 15 billion. Costa Rica, 50 billion. That's the size of the economy, roughly. Costa Rica's maybe a little bit more, 70 maybe billion. Miami, the general metropolitan area of Miami, about 150 billion. So just that city is more than these two countries combined, right? So think about that, right? It's a different ballgame. And then, okay, the size of the economy, but many people can think, okay, well, then that means there's opportunity. There's limited resources too, right? So you're not going to have the liquidity you have here. You're not going to have, from a lending perspective, interest rates in Nicaragua are going to be, a conventional mortgage to buy a house is going to be 10% interest rate, if you can get it, right? In Costa Rica, you may get 8.5, 7, very low one. So I started looking at all these numbers, and I'm like, okay, so let's take a step back and I'll analyze the continent as a whole. And first of all, there's not much data, so it's hard. And what I looked into was Mexico and Chile are probably the countries that have the most data because they're the most sophisticated or the most institutionalized. And the data is going to be more at a public market kind of level thing. So I looked at the time, this must have been 2018, 2019, as I was transitioning. I looked at the 10-year returns on the index. There's an index, I forgot the exact name of it right now, but there's a Latin American index for real estate, for commercial real estate. And the 10-year return had been negative 9% annually. In the U.S., it had been, I think, I want to say about plus 10 or plus 11 or 12% annually, and if I recall correctly. But the most interesting thing was that the standard deviation, which measures the risk, I hope I'm not losing you, that the standard deviation that measures the risk was 30% in Latin America and about 12% in the U.S. So you're losing money and taking on a much higher risk. So that just opened up my eyes. I'm like, what am I doing? I mean, I have access to the U.S. I've been doing it in the U.S. already. I'll just go do it over there and forget about investing in Latin America for some time. The CBRE came out with a study as well, like 2 years ago, that I read, that the spread between the cap rate and their government bond, their equivalent to a 10-year treasury, was about 200 basis points. And at the time, the spread in the U.S. was about 450 basis points. So you also have lending challenges. We don't have the liquidity. In Latin America, you're not going to have the liquidity in the market in general, be it lending, equity, or any of the areas of the capital stack. You're not going to have nearly as much liquidity as you have here.
Hey guys, it's Whitney. I wanted to take some time to introduce you to my good friends over at PassiveInvesting.com. They're a national private equity real estate firm based out of the Carolinas. They focus on acquiring institutional quality apartments and self-storage facilities. They do this with private accredited investor funds. They have a portfolio of over $700 million in assets and control over $250 million in equity from their investors. PassiveInvesting.com makes it easy for you to start investing in real estate without all the hassles. They even have an average 62% repeat investor rate in each offering they put together. They even have a real estate debt fund that offers hard money loans to local fix and flippers across the U.S., which currently has a 0% default rate. To help you learn more, they've put together a free passive investor guide that outlines the 7 red flags for passive apartment and self-storage investing. Visit PassiveInvesting.com/red flags to download the PDF now. That's PassiveInvesting.com/red flags.
Are you going to have to fund it mostly yourself there, or will you be able to get debt?
You will be able to get that. It's going to be more expensive. It's not going to go below, depends on the country. Mexico, you'll probably be somewhere about around 7% if you're on the low end. Chile probably has a lower interest rates, but Chile has also had its challenges recently. But Chile, in its good times, you can probably get 6-ish. Nicaragua, 10. Costa Rica, 9.
So what were some of the first projects you started doing in the U.S.? What was your game plan after you realized this, everything you just said, like, okay, the light bulb went off. What am I doing? I need to focus on the U.S. now. What was your plan then?
I had this big interest for multifamily investing and syndication in general. And I had been investing with a group of syndicators and I just asked them, look, I want to keep investing, but I also want to, how can I be part of the team? How can I be a partner? How can I be part on the GP team? And we came to an agreement, and I did my first GP deal with them, which was in the Atlanta area, and ever since, we did about 3-4 deals together, and yeah.
Nice. So you started as an LP, started educating yourself, you invested, and then you built a relationship with that GP, right? Mm-hmm. And asked to partner with them. So in that position, I guess, as partnering them? What was your role, or what did that look like? Just for the listener, many of them, oftentimes they'll say, you know what, some of the best ways to get started in our industry is by having some type of skill set, right? Or something that's valuable to an operator and trying to partner like you have done.
Right.
How did you do that? What did that relationship look like?
I'm sure many listeners are thinking, how do I even find my skill set? I've never done this before. And it's a valid question. I mean, I've had the same problem. In my case, what I did was I asked, it worked. I'm not saying go do that, but I had built the relationship to the level where I could do that. I had been investing with these guys for 3-4 years. I had invested with them in 5-6 deals. So if you've done that, I mean, I would highly encourage you, if you can, if you have the funds available or the relationship, to try to get in as an LP in a deal and build a relationship with the sponsor team. And you may end up doing a deal with them on the GP level or not, but it's going to give you an experience that it's going to give you so much education experience. I think it's very valuable. For me, it was a game changer.
What were maybe a resource or two that you used to become confident being an LP even, to start investing passively?
Reading. I just read a lot and listened to a lot of podcasts. I self-educated. That's what I did. So one of the things I do is I don't watch TV much anymore or anything like that. Like on my free time, what I do is I listen to real estate podcasts like your show. And after a while, if you listen to enough of them, it just ingrains in you and it becomes natural and you start getting the confidence and you understand the language. And for me, that's what worked. I wasn't studying it like in an academic setting or a school, but listening enough about the subject and listening to podcasts, eventually it just ingrains in you and it becomes natural.
Yeah, constant education, right? I appreciate you mentioning, hey, I'm not watching TV. I'm choosing to spend my time more wisely, right? As I think all of us could consider, hey, what are things we're doing? I also do not ever watch TV. I feel like it's such a waste of time, or I almost feel guilty.
Right.
Like I could be doing something else.
I enjoy it more too. I enjoy more listening to a podcast or watching a YouTube channel.
Right. Me too. So, then what does your real estate business look like now?
I've GP'd in just over 400 units now, and we have properties in Atlanta, North Carolina, and the Greensboro area. And we're starting to buy, and we like very much the Oklahoma City market and Charleston. We're starting to buy smaller properties now, the 30 to 40 units in the urban core of Oklahoma City, trying to build a portfolio of units that are within a block or two of each other, and where we can get that economies of scale. For us, it's been easier, I guess, to get access to those type of deals. There's less competition. We tend to be the better qualified buyer for the 30, 40, 50 unit size building versus when we go to the 200 unit building. That's not going to be the case always, right?
So what's next for your business? What are you all striving, or maybe goals you even have for this year?
Continue growing in those two markets. It's two markets I really like. And as I was saying before, I've experienced doing real estate in Latin America and in the U.S. And I've done research. I mean, I'm in a unique position, I guess, where I live in Miami, which is Latin America. It's like the capital of Latin America. I don't know. I think most people know that we speak a lot of Spanish there, and Latin Americans just spend a lot of time there. And I've started bringing this opportunity to Latin Americans, and they come to the U.S. and I go to talks and educate them about the industry, and it's completely new to them because even here, a lot of people don't know how multifamily works and the whole commercial real estate space works, but it's even less in Latin America just because the concept doesn't exist. So my goal has been to bring this opportunity to them. I'm educating them and trying to bring them this great opportunity that I think can benefit them a lot. Everyone's worried in Latin America, but there's a lot of countries that, if you look at Chile, Peru, Colombia, at least those three countries have recently had elections that are not favorable towards let's call it capitalism, right? So just to stay away from politics. So investors from those countries are very concerned about their future of their countries. So Mexico, same thing.
And really you have a direct connection with those people, right? It's a niche that you're going to connect to them a lot faster than I would, right? And so it's just neat. Well, and on that note, I know we talked about it briefly before we got started, but what is your best source for finding investors right now? Let's jump into that a little bit. Maybe it's part of the same conversation. My
best source recently has become Latin America. I get invited to speak at different events. There's not many people that know multifamily and speak Spanish fluently or natively like I do. So I guess that's probably, that's my advantage. and my competitive advantage. And I get invited to this event, and many of the listeners of the event reach out to me.
Of course.
And historically, it's been mostly friends and family. Like in the past, it's been mostly friends and family and that type of things. I haven't been too intentional. I'm starting to get more intentional about it now and going to the talks.
How do those people know who you are to even reach out to ask you to speak at an event? And like many of the listeners, including, I've done this myself, but you got to figure out some way to get yourself out there, right? You got to figure out some way for people to even know that you're somebody qualified, that they would want to come and speak. How do they find you?
Networking and referrals. That's my answer. I've been referred to, once you get into one, if you speak well, and first of all, you have to, if you find your competitive advantage, there's not many people that they don't have any options anyways, right? So I'm the go-to now in the area for multifamily to talk about multifamily. And I start getting referred. So what happens with me specifically is I'm not going to say the only one, but I'm one of the few who can speak multifamily in Spanish. So having that uniqueness, I guess, is once you get into one, then you can get to the second one and the third one. And the first one can be small. I mean, it doesn't have to be, it can be a meetup.
It's probably good practice too if it's smaller the first time, right?
Probably better, yeah. Probably better that you start off with something small.
So I guess moving forward too, I was just thinking through, what do you see as maybe your biggest challenge this next year?
I've not been as involved in the investor relations side of the business. I've been mostly involved in the asset management side of the business. And my newer investors, I've already started having investors from Latin America. I've had a couple, but not many in the past, but that's starting to change. My biggest challenge, I think, is going to be, how am I going to balance investor relations and asset management? And can I do both? I don't know. But I'll have to be involved in the investor relations for now, unless I can hire someone who can replace that side of the business for me.
And I think that's going to be more difficult for you than, say, it would be me to hire somebody to replace you, because obviously they need to be fluent in Spanish, most likely, right? If many of your investors are coming from Spanish-speaking countries, that's
exactly.
their native language, and you want them to feel comfortable with who they're speaking to in the same language. And
to that point, investors from Latin America and from other countries, I'm pretty sure this happens from the rest of the world. These can be high net worth individuals, and they have an ego. If you speak to them in English, they're not going to understand, right? They may speak English, but they're not going to understand. And if they don't understand, they don't want to admit it, right? So it's a very delicate thing to do, right? I mean, some of them are fluent in English and they're comfortable, but a lot of them are not. And especially if they're older generations, and they've been in business for some time, they're used to being on the mentor side and being the one giving the advice, and all of a sudden that changes, and now we change the language on them. You have to know how to do that.
And if someone's confused, especially an investor in our space, usually their answer is going to be no, right?
Right.
Yeah, and I don't blame them at all for that. And that's why, even on our side, I would say, even speaking English to somebody that speaks English, the language you use, how you speak to your investor, you just have to be conscious of, hey, we're not talking down to them. We're using language that's very clear and understandable. So it's a good reminder, even if we're not speaking to someone whose native language is Spanish or a different language than your own.
And it takes a lot of discipline to not overtalk, because we want to share everything, right? We know all this. We want to share everything about the great deal we have, or about the industry, how great it is. But it takes discipline to keep it simple.
With everything you've done now, Latin America development, now coming to the States with all the research you've done, investing passively, but now being on the general partnership side, what would you tell yourself 5 years ago? What would you say, Bernard, you need to know this or do this differently, or anything like that we could learn from?
If you would have asked me this 6 months ago, I would have said, don't invest in Latin America. Go directly to the U.S. That's changed, and we're out here in GoAbundance right now. We're in Park City at a conference. And even as I've been a part of GoAbundance and being exposed to the different individuals here, what I've seen is that, if anything, that experience, it wasn't a bad one. It was a good one, right? Would it have been financially better or more advantageous here in the U.S.? Probably. I don't know that. But the struggles and the challenges that I dealt with in Latin America in general put things into perspective at a level that I would have never, ever, you just can't communicate it to someone, right? If you have to live it. So I'm happy I went through that. And I would say to myself, just keep doing it and be patient. I still struggle with patience. But looking back, if you put the work in and if you do things right and you educate yourself and you do the research and and you know what eventually you know what you're doing, and you do it with partnerships, and if you have a plan and you're doing things right, you'll be fine. It's going to take time. So that's where you need the patience.
Patience, yes. We all probably need more of that, to say the least. What about any predictions that you have for just the real estate market over the next 6 to 12 months? Anything you're considering as you're looking at new projects that maybe was different last year that you're looking at for this next year?
Right. So I think that better quality assets are more attractive right now, but they've been more attractive for some time. But so if we're looking at predictions, I would say interest rates are going to rise slightly, less than what we think. I think also that there's so much liquidity out there in the financial system, in people's bank accounts and pockets, and in general. I follow Dr. Peter Linneman a lot. I don't know if you're familiar with him. He's a real estate economist. And I'm very inspired by his analysis on the market, and I'm taking most of this from him. But there is so much liquidity in this market that we still have a lot of room for growth.
Nice. And say his name again.
Peter Linneman.
Linneman.
Yeah. Linneman. I'm not sure if it has two N's or one N at the end. But he is one of the founders of University of Pennsylvania Wharton's real estate department, and I believe he's one of the founders. But if not, he was an important figure.
Great.
He's not academic anymore, but
yeah, well, I just want our team to be able to look it up. We'll try to have a link to him or something in the show notes. That would be great. I think listeners would appreciate being able to look him up as well, since that's somebody you look up to. What about preparing for some type of downturn? Just in case there is, are you doing anything, say, different now when you're looking at deals than maybe you did, would have done 2 years ago, just based on what's happened in the economy?
Two main things. One, and not just when I'm looking, but the way I buy. The financing is very important right now. You just have to finance it right. I don't want to put myself in a position where I have to refi in a year or two, and maybe I was counting on a level of growth that is going to be unachievable. So I'm being more conservative on that side with bridge lending and whatnot. Not that I won't do bridge lending, but I won't be as aggressive with that refi event in my underwriting. With that said, I do think there's space to grow, but we all get nervous, obviously, because it's been growing so much lately that we get nervous, and we're trying to be a little bit more conservative. But that's been happening for the last 10 years or so. We've been nervous for the past 10 years. So yeah.
Yeah, and all of us wish we'd have bought more even a year ago, much less 5 years ago, right? What's the biggest thing that's holding you back right now, say, from scaling many times over?
A good team. I have great partners. We need, I guess, get out of our comfort zone and start hiring.
Who's going to be your next hires that's going to help you to scale?
Investor relations or acquisitions.
Okay.
Yeah.
I can completely relate to that personally as well. What about a way you have recently improved your business that we could also apply to our business?
I have started hiring more administrative level team members, VAs and things like that. That has been very helpful. And I would encourage anyone that's thinking about it, don't hesitate. Go out and hire someone. It's if it doesn't work out, it won't work out. It's not going to be the end of the world. You can try it out for 2-3 months. If you do have a plan, do be prepared to train them, do prepare for, to all this. Don't just hire them and think that it's going to be magical. It's not.
Yeah, no doubt about it. A team is so important, and virtual assistants, VAs, they're so capable in different aspects of business, right? Depending on what you're needing. I encourage people off. We have a whole team, or 10 or 12 full-time VAs,
right?
And couldn't make it without them. And very loyal as well. We've appreciated their help. And so, what about a few daily habits, Bernard, that you are disciplined about that have helped you achieve success?
Okay, so I already mentioned it, but I'm going to mention it again, and I'm going to explain more about it. So what I say is I replaced my entertainment with educational entertainment, specifically real estate. So that's my habit. I rarely watch Netflix or any of the the other stuff on TV or the news. I never watch the news.
That's too discouraging, right?
Yeah. So that's it. I've replaced my entertainment with education entertainment because I'm entertained. So for me, that's easy, and it's become a habit at this point.
It's a good habit. Constant education. Yeah, no doubt about it. What about if you could pick one thing that's contributed to your success, what would that be?
I am an introvert by nature, so it's not as easy as it is for others to network. Throughout the years, I have found my ways to network, and I just take it easy. I don't force it. I just get myself out there.
Nice. Maybe early on, what were a couple key things that you did to network well and to grow your network?
Talking about what I do is huge. You talk to your friends, to your family, and they'll connect you. And my family members, my brother, my father-in-law, and whatnot have taken me to lunch with other people that I have ended up doing business with.
Nice. I've learned so many times, like you just can never judge a book by its cover. You share what you do with all kinds of people, and it's incredible how interested most people are, right? And they want to talk to other people about it, or you just never know where connections are going to come from.
And for me, it was so hard to network that I guess my solution to that was to not force it. Just get out there. Just do it one day at a time. You get out there, you go, you start going to the events, you start going to, and network doesn't have to be going to a real estate conference. Network can be going to dinner with others, that stuff is socializing in general is also networking. There's several ways to network.
Right.
So find your way to network.
How do you like to give back?
I donate to charities in Nicaragua just because I have ties to that country and they're going through a very hard time. So I try to stay on charities that do more educational stuff. But yeah, the country's going through a very hard time, so it goes to my heart.
Sure.
I also like to talk about what I do. I mean, I love when people ask me about what I do, and if I can give them any advice, I love it. I enjoy it more than anything else.
Yeah, that's awesome. It's neat just the personal tie that you have there too, and that you're able to help them, in a big way. Bernard, it's been a pleasure to meet you and hear just really about your story. I mean, investing in Latin America, there's not many of us that are probably listening, if any, that have done that, especially development, in another country alone, much less our development as our first deal, much less in another country. So just grateful to hear that. I mean, your story, but even the research, the level of depth of research that you did to understand, hey, I just need to stop this and start investing over here because of all these things, right? I mean, it was obvious to you after you did the research, but even how you found investors, how you're finding investors, some of the challenges you're facing, just appreciate your transparency. How can the listeners get in touch with you and learn more about you?
I'm on all those social media, Facebook, LinkedIn. If you look up my name, you'll find me and you can message me there, or you can email me my email is bpierson, BPIERSON at equitipartners.com, and Equiti is with an I at the end, so that's for international. So EQUITI partners.com.
Nice. Bernard, again, pleasure to meet you. I hope you have a blessed day.
Thank you. Thank you, Whitney. It was great being on here. Thanks for having me.
Thank you for being a loyal listener of the show. Please subscribe and share it with your friends. We want to help you become the passive investor you've always wanted to become, but also the operator you've always wanted to become. We want to be the number one resource for your real estate investing journey. But go to lifebridgecapital.com where you can start investing in real estate today.